Hi, Jonathan York by Financial Partners, looking at investment markets. The latest data coming out of the US was a little bit of a mixed picture. The monthly figures were a little bit better than expected by about a tenth, but core CPI is still running at 3.1%. Now that's higher than the previous count at 2.9 and also higher than the 3% of 12 months ago. So that poses a little bit of a problem for the Fed now because, certainly on that jobs data that was much weaker with that downward revision of over 250,000. The worry is obviously that Trump is now going to appoint, his nomination, and the worry is from Wall Street is actually the credibility of that data because, certainly Trump doesn't like to hear bad news. And, the worry is that, he will actually find some way of sort of manipulating those numbers to make it look slightly better than they are. Now that does pose a little bit of a problem for the Fed because obviously after that weak jobs data, now it's just about the credibility of the numbers coming forward. Because certainly Trump wasn't happy with that jobs number, and obviously he fired the commissioner of the BLS. And just on the Fed as well, Trump is potentially looking at issuing a lawsuit against Jay Powell and the Fed, just trying to force his way again to get those lower rates. But basic economics just dictate that, if you've got an economy growing at 3%, you've got okay sort of jobs data coming through. Okay, it's a little bit on the weak side, but certainly GDP is still out there. But you've got inflation running above their target. The economy doesn't need to be stimulated by lower rates. It was quite interesting. Well, Trump rolled out Stephen Moore, who is to be a less than credible economist, to explain that the BLS figures were wrong, his numbers were correct, and they'd never been doing better than the US economy had done before. Now, what was quite interesting was that the sort of rhetoric that accompanied these sort of charts that he sort of wheeled out says this is the data we just put together, never been seen before. So again, where this data came from, where it's going to be verified, and the credibility of it is, a big question mark. But again, it suits Trump's sort of rhetoric and his sort of picture that the US economy is doing better than ever before. Now, also as well, Trump's managed to appoint for a temporary measure Stephen Mirren onto the Fed. That's certainly going to give him one vote for lower rates. But given the vote was a 9-2 split last time, even if you get one more vote, it's still going to come out at an 8-3 vote if they vote along the same lines as before. Now, on the back of those CPI data, rates are sort of holding steady in the US. 30 years around 486, 10 years around 426. But the 2 years actually nudged up slightly, it's 279. Now, again, the other big news is Trump is meeting with Putin at the end of this week. Now, the irony in that meeting is that that came on the day that Trump was supposedly going to introduce the new secondary tariffs on Russia. So they're meeting at the end of this week to discuss, obviously, the Ukraine conflict. But interesting, obviously, Ukraine is not going to be present at these meetings. And all the while, Russia continues to bomb Ukraine on a daily basis. The other big news as well is it looks like that Taco Trump has struck again and postponed the tariffs on China for a further 90 days. But then what is also interesting as well, no one's talking about the Epstein files because of what's going on in other areas. Oil's backed off now and is below $64 a barrel. Now in the UK, the Bank of England did deliver a rate cut, taking the base rate down to 4%, but it was a 5-4 split. So, pretty sort of contentious there, and it'll just be interesting to see if any further cuts are forthcoming over the next sort of 2 to 3 months. Because certainly the UK economy needs it. Now in the EU, it's still pretty nervous out there, waiting to see the impact of the tariffs. But also as well, obviously waiting to see what comes out of this meeting between Trump and Putin as well. And you've still got Gaza. Now the RBA cut the cash rate there, taking it down to 3.6, which was certainly welcome news for the Australian economy. And the Australian economy is still doing pretty well out there, and with further rate cuts, predicted to do reasonably well over the next sort of 12 to 18 months. Now here in New Zealand, unemployment is still nudging a little bit higher and potentially could see 5.3 by year end. So for all the talk about sort of green shoots and the economy sort of recovering, it's still a very slow progress out there and really does need further rate cuts to sort of help stimulate the economy. So all eyes obviously be on the Reserve Bank and the August the 20th meeting, when they are expected to cut the OCR down to 3%. And then potentially down to 275 by year end, and then possibly even 2.5 by sort of first quarter of 2026. Because although we've seen 225 basis points off the OCR from the peak, you still got quite a few mortgages that will get reset within the next 6 months, and they will be reset at substantially lower rates, and that will give quite a bit more disposable income out there for the economy. Because although inflation is sort of stubbornly above that sort of 2%, it's still not touching the upper range of the band at 3%. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.